Welcome to Farmers Inside Track. I'm Duncan Masiwa. In this episode of our Agri Trends Spring Special, we examine how tariff-driven trade disruptions are reshaping global grain and oilseed markets and what it means for South African growers. Ivor Price spoke with APSA economists Zama Sangweni and Kensani Mashimbi.
Production in agriculture is one leg. You need to be able to move your products out. So that's something that we continue to monitor going forward in terms of sustainability and longevity to this strategy that they are following. Is, are they able to completely seize this opportunity when it matters?
Global trade tensions continue to add pressure to export and price opportunities, and this is evident in the latest edition. It's the spring edition of APSA's Agri Trends report just released. And joining me for this conversation on the grain and oilseeds markets are two of APSA's leading agricultural economists. Zama, perhaps we start with you. Grain and oilseeds markets often shaped by global demand. We know China is the big player here, a huge demand. How have China's role evolved following these trade tension tariffs that we've seen implemented from the US?
So, Ivo, China is quite a special player within global trade dynamics. I like to describe them as a country that has evolved to the global demand, so highly dependent on imports, but now they're going to more of a inward-looking strategy, and it's a dual strategy that they're working on. But we'll touch on that. Let me just get into where China actually comes from. So if we're considering wheat and corn, it's more of a similar story. I think the differences are in the timelines. But if we talk about wheat production and wheat trends within China, so pre-2020, we saw that wheat in China was actually being produced at a surplus. And in some instances, you would see sort of demand and supply trading next to each other. But after 2020, what we started to assess was that there started to be deficits in terms of their local production. So around about in 2024, I think the tide shifted a little bit. They now started being in a position where they're ramping up their local production in order to try and limit that deficit, basically easing the dependency on imports. And I think it's a good strategy because in seasons where we see global shortages, you do sort of want to make sure that you have those supplies. Corn in the other instance is a similar story. I think we started picking up the end of a surplus period earlier in 2017. If you're comparing it to wheat, that happened a bit later, which was in 2020. It's a similar story, but them too around 2023, started shifting the tide to say they're ramping up local production. Soybeans in the other aspect is quite a different story. So soybeans has not been trading like wheat and corn. They're quite flat in terms of production. And when we discuss the dynamics with Kensani, if you consider corn and wheat, they're quite staples in China. So they take priority in terms of arable land. There's quite a limitation in China. They're not spoiled for choice like South Africa. So staple foods like wheat, corn, and rice take top priority. Soybean is kind of seen as the stepchild when it comes to land allocation. And as a result, that's why they haven't been able to keep up with local soybean production. But on the other hand, local soybean demand has been staggering. Like it's been quite consistent. We've seen it pre-2020, we've seen it post-2020. And even though population sizes have eased, I think India is the big player now in terms of population. China used to be the main guy. But what I'm trying to say to you is that in terms of local soybean production, there have been limitations. So China has remained import dependent. And I think it again touches on comparative advantage. I think they've just established that we're going to prioritize the main staple groups like I mentioned. And then when it comes to soybeans, they're going to remain import dependent. So it's been quite an interesting situation with soybeans, because with being an import dependent country, you then are looking at or dependent on other global suppliers. And I think we're all aware of the tariff war between China and the USA that started in 2018, kind of shifted global dynamics from China moving to mostly or majorly depending on the USA as a supplier for soybeans. And you see other new market players such as Brazil coming in and taking in some of that market share to supply to China. But I think the dynamics remain quite simple, right? They produce what they can. They're ramping up your wheat and corn. And to a certain extent, they're also considering investing. They actually have invested in grain storage facilities just to show you that they're indicating to the world that we are anticipating bumper crop sizes. So they're doing quite well there. But soybeans, I think they're quite honest to say, let somebody that can produce it better produce it for us and we'll import it.
Look, love them or hate them, I always admire how agile China is and how quickly they're able to respond to challenges and opportunities. And it's also interesting to note the shift from China to India, as you mentioned. But Brazil has been shooting out the lights when it comes to soybean production. They've been doing really, really well. And I'm wondering if that is enough to become a threat to the likes of the United States or not.
Sure, Iva, I think they are a threat. They are definitely a threat, but they have ramped up production by 50% now compared to the first trade war in 2018. So production and exports are expected to be higher for this marketing season coming up. So we see Brazil really taking up the space, seizing the opportunity. And what also works for them is their exchange rate dynamics. Their currency is a bit weaker, which makes them relatively more competitive. But what I found interesting in this analysis and what we tried to look at is to research their ability to seize this opportunity. Because it's one thing to increase production. How do you get it out of the country? And what comes in there in that analysis, it's a GOFI index, it's a grain and oilseeds freight index that shows the relative price that is charged through trade routes of shipping through main trade routes. And then through that analysis, you get sub indices for Brazil, you get a sub index for the USA and other major suppliers. And what emerges from that analysis is that it is more expensive to ship from Brazil than the US. So it brings a layer of vulnerability there because their infrastructure, their port facilities, their in-house logistics are something that still needs attention. And that was us a few years back. It's a lesson that we've learned practically to say production in agriculture is one leg. You need to be able to move your products out. So that's something that we continue to monitor going forward in terms of sustainability and longevity to this strategy that they are following. Is are they able to completely seize this opportunity when it matters? Are they able to respond in times where there are droughts? We've seen previously where there are floods and then suddenly exports are halted. Then China quickly needs to move on to to import from the USA. So that's another leg of this strategy that we continue to monitor.
It's not an easy game to play, and we'll certainly be watching developments there from Brazil. But maybe if I can stick with you for a moment, let's bring it a bit closer to home to some of our local summer crops and particularly maize. What are some of the trends that we can expect in the latest edition of the ABSA Agri-Trends report?
Perhaps to take it a step back to just note that we do come from a difficult period in the previous season. So what was predominantly rather determining price movements within the previous marketing year is that the fact that we came from a period where production was constrained, not only in South Africa, also in the regional, our regional neighbors as well had lower production. So we started at a lower base because the demand was high. So you'd see that our stocks levels for yellow maize, for example, was low to decreased by 47% and higher for white maize. And it's similar for other countries, prominent players like Zambia and Zimbabwe was even worse. They needed more, in excess of 1 million tons of maize that they had to import from South Africa. So that gave us a starting point where we had to take a step back and say, now it's time to replenish stocks, not just for South Africa, but also for the neighboring countries. So that was a major price driver towards the end of the year and the beginning of the year. And then when it was time now to say, okay, it's time to harvest. The fact that we started our season a bit later, I think 6 weeks later, there were guys that planted earlier, but the majority planted later. And then there were rains. So that whole delay in harvest, in deliveries, and also something that also emerged that drove prices a little bit further was the fact that, okay, we have maize, and rainfall for an extended time. What's going to happen to quality? So those were the fundamentals driving prices during that time. But we have seen prices starting to normalize now that the delivery pace has caught up. However, we have to note that the fact that we started from a very low base, prices are going to hover above export parity for this season. Perhaps when we start the 2025-2026 season, given that production conditions are expected to remain favorable on the back of the expectation of the La Nina coming later, we are in a neutral phase. But if that materializes, I think we are in a position where perhaps in 2026 we can go back to export parity prices.
Zama, what are you seeing when it comes to local soybeans? I know you're the soybean agricultural economist queen, keeping your eye on soybeans amongst others.
So just to draw on Kensani's points about rain, weather conditions, I think we were moving from a base of climate variability. But I think for soybeans, weather conditions have been quite favorable. So we are anticipating a bit of increase in terms of local production. However, we are expecting that local prices will also trend in respect to export parity levels. But I think the story is a good one across all grains and oilseed sectors to say we're having a good season. Numbers have ramped up, so we're anticipating, prices to also trade modestly with export parity levels. But I think we're going to get to a level where we do actually recover as an industry from the drought period we had in 2024.
Yeah, and just to add, so for soybeans is actually 46% recovery. So it's twice. It is because we were lower than I think we were at 1.8 million. Now we're at 2.4. So it is quite a sizable recovery that's expected. And when you look at it in context of the soybean market, for me is quite amazing how that industry has just grown over the years, and now it's able to not only solution for local production for our soybean need, but then our oil cake need for the livestock sector. So it's quite a special industry for us. So what we expect, we expect the second largest crop on record. So I think that the 2023 at 2.7 million tons was the highest. This is the second highest, which is why we've seen those prices really rapidly declining and singing to global tunes. Yeah.
So I know that the likes of Grain SA, commodity organization, and grain producers rely on APSA's Agri-Trends report to shape their thinking and make some tough decisions. Maybe in closing, take us to the local wheat and industry outlook. What are you expecting?
Sure, I think we also depend on them quite heavily. It is an industry where you need to lean on each other quite heavily. But if we look at wheat, perhaps if we take a step to 2 seasons back, we faced 2 seasons of decreased production. In 2023, because of those droughts that caused a little bit of quality issues towards the end, as well as in 2024, where we saw excessive rainfall and some frost towards the end of the seasons that caused production to decrease quite notably from 2023 to 6.1%. So now when we enter this season, producers are indicating that they are planting 1.4% hectares more than last season. And considering the production conditions, they are quite better compared to last season. We have spoken to some of our specialists in the Western Cape where the concerns were, but they are indicating that rainfall came in at around an ideal time, and then there were follow-up winds, so they are expecting the crop to rebound. So what we see there in terms of price, when we did our analysis now in July, we saw SAFEX prices moving opposite to global prices, and that was because of this local production deficit, or rather lower local production from the lower local production from the other seasons, and also the import, the variable import tariff kicking into place. I think it's about 564 rand per ton that kicks in when the global wheat price trades below $279, and it has traded at those levels for quite some time. So we see exchange rate dynamics as well as that import tariff differential keeping that wheat price above the $6,000 rand per ton for the rest of the year, and presenting that buffer. But we have to note that on a global front, production is in excess. There's a lot of production, but perhaps not in excess. There is a lot of production. There is also a lot of consumption. So stocks are a bit under pressure, but it has been consecutive years of increased production. So that has kept prices lower on the global front. So we do see a little bit of pressure from the global front for the wheat markets.
I always find it so impressive when agricultural economists such as yourself remember all these difficult numbers, but above all, thank you for helping us make sense. It's not just numbers. What does it mean for the agricultural sector, and specifically the grain and the oilseeds market? ABSA's Agri-Trends report, the spring edition, now available for download on most platforms, and be on the lookout for the next chapter, which will delve into some of the dynamics we're seeing in the livestock sector.
That's it for this episode on how US tariffs and global uncertainty weigh on agricultural exports. Thank you to agricultural economists Zama Sangweni and Kensani Mashimbi for sharing their expertise. For deeper coverage of ABSA's Agri-Trends report, head to Freeform Mzansi's website. I'm Duncan Masiwa, and this has been Farmers Inside Track.